Ladies and gentlemen, good day and welcome to Aditya Birla Sun Life Asset Management Q4 and FY25 earnings conference call, hosted by Incred Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Meghna Luthra from Incred Equities. Thank you, and over to you, ma'am.
Thank you, Manu. Good evening, everyone. On behalf of Incred Equities, I welcome all to Aditya Birla Life Sunrise AMC fourth quarter FY25 earnings conference call. We have along with us Mr. A. Balasubramaniam, Managing Director and CEO, along with the senior management of the company. We are thankful to the management for allowing us this opportunity. I would now like to hand it over to Mr. A. Balasubramaniam for his opening remarks. Over to you, sir.
Thanks, Meghna, for the introduction. Good evening, everyone, and thank you for joining today's investors call. I trust you all had the opportunity to review our earnings presentation, which is available on both the stock exchange and our website. Let me begin with the economic outlook very quickly and update on the mutual fund industry. The global macroeconomic outlook for the new financial year suggests a continuation of moderate but uneven growth, with a projection around 3.3% for the global economy. Inflation is expected to moderate further, with the global headline inflation potentially falling below 4.2%, and key risks still persist, including the geopolitical tensions and potential for increased trade restrictions and macroeconomic volatility stemming from unexpected economic shifts or the policy changes. Central banks are expected to remain vigilant, calibrating monetary policy cautiously, especially in the US, while fiscal policy will need to focus on long-term stability and growth-enhancing measures. India's macroeconomic outlook remains strong, with the GDP growth projected at about 6.5%. This robust expansion is driven by sustained domestic demand, rising government capital expenditure, and gradual easing of inflation. While global risk, particularly from the US trade policies, could affect exports, India's limited reliance on the external markets provides significant insulation. Inflation is expected to average about 4.1% for the fiscal year, giving the RBI flexibility for potential rate cut. The fiscal deficit is targeted to decline to about 4.4% of GDP, reinforcing the government commitment to fiscal consolidation. Overall, India is poised for continued growth, though the global risk and the need for sustained private investment warrant careful monitoring. The recent positive turnaround in the Indian stock market, with indices like the Nifty 50 and Sensex rebounding March 25, faces significant headwinds due to the potential impact of the newly implemented term tariff. And our domestic optimism, returning from foreign investment, reasonable valuations, and signs of economic recovery, provided the necessary support for our market. Additionally, India is actively pursuing a trade deal with the US to secure favorable terms and minimize the potential disruptions, and hopefully it happens soon for the benefit of our economic growth. Moving to the Indian mutual fund industry, the quarterly average AUM of mutual fund industry as on 31st of March 2025 stood at 67.42 lakh crore as compared to 54.1 lakh crore as of March 2024, growing by 28% on a year-on-year basis. Due to recent volatility in the equity market, Q4FY25 saw a slowdown in equity net sales compared to the previous quarter. Equity net sales for the Q4FY25 were around 1,21,000 crores versus 1,60,000 crores in Q3FY25. The total NFO collection for Q4FY25 also experienced a decline, totaling to about 12,500 crores, with 8,500 crores coming from equity, and the rest of the money is coming from fixed income. And mainly the equity flows have come into the sectoral and thematic funds and small cap funds, especially in the NFO collections. While the industry SIP inflows registered a year-on-year growth of 38%, with the 10 crore accounts contributing to approximately 20,900 crores in March 2025, it witnessed a marginal decline on a quarter-on-quarter basis. The total number of mutual fund folios stood around 23.8 crores, with a year-on-year increase of 32%. The individual average AUM for March 25 grew by about 21%, year on year from 33.31 lakh crore to 40.31 lakh crore and contributed 60% of the total AUM. The 30 cities, an average AUM of 12.17 lakh crore for March 2025, accounted for 18% of the total mutual fund AUM. At Aditya Birla AMC, I am pleased to share that we observed positive momentum in sales, driven by improved investment performance and strong on the ground level engagement from our sales team. This has also resulted in quarter-on-quarter increase in our AUM and market share. As part of our ongoing engagement, this quarter we also hosted an exclusive event, Vantage Point 2025, which brought together the country's top MFDs. The event was pivotal in strengthening our relationship and fostering deeper collaboration with these key partners in order to increase our engagement as well as market share. It has in fact enabled them to better advise their investors with the tailored investment solutions suited to the evolving market dynamics. Our overall average assets under management, including alternate assets, stood at 4.06 lakh crore, reflecting a 17% year-on-year growth. Our mutual fund quarterly average AUM reached to 3.82 lakh crore, growing 15% year-on-year. The quarterly equity average AUM stood at 1.69 lakh crore, growing by 11% year-on-year. Our SIP book for March 25 stood at 1,316 crores and we added about 5.43 lakh new SIPs in Q4FY25. Our total investor folio stood at 1.06 crores with around 27 lakh new folios added during the FY25. On the alternate business front, we are continuously enhancing our PMS and AIF offering across both equity and fixed income to better serve the evolving needs of HNIs and family offices. Following the receipt of the ESIC mandate, we commenced management of debt portfolio and AUM stood about 7,456 crores for the quarter ended March 31st, 2025. Consequently, our PMS AIF assets witnessed a year-on-year growth of 268%, rising from 3,773 crores to 11,333 crores. Additionally, we are also preparing to launch the ABSL Equity Innovation Fund under the PMS category. Our offshore assets grew by 14% from 10,545 crores to 12,070 crores. Under the GIFT City platform, we had our final closure of ABSL Global Emerging Market Equity Fund under the LRS scheme with the AUM of about $65 million. Fundraising is underway for the India ESG Engagement Fund, ABSL FlexiCap Fund for inward remittance, and ABSL Global Blue Chip Funds under LRS schemes for outward remittance. Aligned with our vision to scale and passive business, we continue to offer a diverse and performance-driven product to investors. As of March 2025, our total passive assets reached approximately 31,700 crores with a growing customer base exceeding 11.6 lakh folios. Our current product suite comprises a distinct offering designed to meet varied investment needs of the customers with a mix of equity and fixed income index funds. Moving on to the financials, we at ABSL AMC have achieved profit after tax of 931 crores in FY25, which is up 19% year-on-year. For FY 2025, our operating revenue is at 1,683 crores, up 28% year-on-year, and total revenue is 1,986 crores, up 21% year-on-year. Operating profit before tax is at 944 crores, up 31% year-on-year, and profit before tax is 1,245 crores, up 23% year-on-year. In Q4 FY24, our operating revenue is at 429 crores, up 17% year-on-year. Total revenue is 501 crores, up 14% year-on-year. Q4 FY24 operating profit before tax is at 233 crores, up 21% year-on-year, and profit before tax is at 305 crores, up 14% year-on-year. We are pleased to announce that the board has proposed a dividend of 24 rupees per share, which is up from the last time what we declared for the year FY 2025. With this, I would like to conclude and open the floor for any questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets only while asking a question. I repeat, if you wish to ask a question, you may press star and one. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Now, we have our first question from the line of Swarna Mukherjee from BNK Securities. Please go ahead.
Hi, sir. Good afternoon, and thank you for the opportunity. I have three, four questions from my side. First one is on the employee expense part. So this quarter, the employee expense had kind of increased sequentially. So I wanted to understand what factors drove these expenses, and if there was, say, a higher variable payout baked into this, how do we account for it? Do we do it on a quarterly basis, or is it that we account it on an actual basis in a particular quarter? So if you could give some color on that, and how should we think about this number in the upcoming quarters as we move into FY26? That is the first question. Second is on the ESIC mandate that we have gotten. If you could give some details on what would be the realizations on that, is this primarily a debt-oriented mandate that we have, largely execution-driven? If you could highlight that. And thirdly, when I look at your SIP data, I think what I see is that the number of live SIPs have also come off. So I just wanted to understand that last year we had kind of significantly increased our share towards the direct channel, particularly the online-oriented channel. Is this leading to some amount of closures in our SIP book, or if you could highlight what the trends are? And given that SIP flows have also come off from what it was in December, so is this, what is our approach towards that, if we would expect this number to kind of now move northwards as market has started to also improve? These will be my questions, sir, and I have a couple of bookkeeping questions which I'll possibly ask after your response.
Thanks, Swarna Mukherjee. I'll take the second question, which is the ESIC mandate. This is basically a debt-oriented mandate, advisory under the portfolio management service. Of course, as you know, this government mandate comes with the lowest possible rate. It's a more of prestigious mandate for us. While we have been in this market for long, and for a variety of reasons, we were not participating in this segment. But given the fact that we have the people who can actually provide greater service to this managing these funds, so this year we bid for it and we got qualified, and therefore we won the mandate. And ideally speaking, the amount could be in the range of about 45,000 crores on the basis of the sharing formula that they have with all others. So that's something. Of course, here we are building it up, and this we only believe winning this kind of mandate can only help us expanding this advisory service to many others, both government and private institutions. And that's something on basis which we have won this mandate. I'm happy to share that it's already, we already got the money and started investing in that. As far as the SIP data concerns, I'll leave the exact number to Prakash. With respect to the SIPs, while we have been clearly focusing on increasing the SIP, that's why you would have seen last few quarters, each quarter we keep improving number. We touched almost about 1,400 crores kind of SIP number, and then we saw some bit of dip. I think largely on account of two things. One, of course, during the current quarter, generally we have seen SIP, both registrations and the net additions have come down for the industry, and we are also in a moral line with that. Also, given the fact that the STP generally is where money comes in and the form of STP, and during the current volatility period, some of the STP transactions also got stopped. As a result of that, number shows a little lower. But otherwise, our focus in terms of building SIP, I think it remains paramount to us. Even some of these promotions that we are doing, the subsidy important plan is SIP, that we are going aggressive in terms of promoting it, and incentivization also is actually set the target, and incentivization is also large on the basis of that. And in fact, our fund performance showing an improvement across the major categories. We are also quite confident that SIP we should start seeing the improvement coming in. Of course, we have set a target only. I don't want to give the target number, given the fact that becomes a projection. But otherwise, clear the focus is there to build our equity through the SIP. That stays constant. As far as the employee expenses concerns, I'll ask Pradeep.
Yeah. So, Mr. Swan Mukherjee, actually employee count, if you see from quarter-on-quarter basis, it has not increased much. It is only in the same range, 1627 to 1628 only. However, we are in the process of building our direct team to 30 to 40 additional people. But that is not going to actually impact much on the cost part.
Right. So sorry, I missed the 1620 to 1630 number, sir. You must be talking about the overall expenses. So if I have this correctly, the employee expenses have moved up from around 88 crores to almost 99 crores. So I mean, I just wanted to understand that 10 crore kind of increase.
Yes, Sonama, the employee expenses for the quarter-on-quarter has increased by 11 crores from 88 crores to 99 crores, which is largely on account of the bonus provisions and the staff welfare expenses. You wanted to know about the bonus provision. So because it's a formula at the year-end basis, the performance of the entire organization, we make the provision for the bonus, and that has increased a little bit, because of which you can see some increase in the overall employee expenses.
Okay, sir, understood. So then next quarter it will again kind of normalize a little bit?
Yes. Again, from the next financial year, the new provisions will start basis the achievement what we will have that time.
Okay, and will you care to build in maybe 10% kind of inflation in the fixed part?
Yeah.
Yeah, I think broadly, just give you a sense on the employee expense. Generally, we have the fixed cost plus variable cost, and variable cost is largely linked to the performance of each of the functions, as well as the company's overall achievement, and therefore these provisions will keep changing. And I think wherever, in fact, last quarter was better than the previous quarter. Therefore, as a result of that, we have to make a little higher provision. Otherwise, sometimes it's a good problem to have.
So basically, just to add, actually there would be some quarter-on-quarter fluctuation, but if you see on year-on-year basis, it's largely in line.
Yeah.
Okay, sir, understood. Very helpful. A couple of bookkeeping questions. If you could provide the SIP AUM number and yields by the different asset classes, that would be very helpful. Thank you.
Yeah, SIP number can you give?
SIP AUM is 75,600 crores. So, Sonama, SIP AUM is 75,600 crores.
Okay, sir. And if you could give the yields by the different asset classes?
So, equity is in the range of around 68, 69.
No, more.
Yield. Yield.
Yeah,
that is in the range of around 24, 25, and liquid is in the range of around 12 to 13 basis points.
Okay, sir. This is very helpful. Thank you so much, sir, and all the best.
Yeah,
thanks, Verma.
Thank you. We have our next question from the line of Prayesh Jain from Motilal Oswal Financial Services. Please go ahead.
Hi, good afternoon, everyone. Just a few questions. Firstly, if I look at your yield this quarter, sequence, we basically divide the revenue by your MF AUM. That's kind of come off in this quarter. That's primarily because of the share of equity going down, or what kind of what would you attribute that to? That is first. Secondly, you mentioned in your opening remarks, sir, that the flow momentum has been strong given the fund performance is improved. Could you just help us understand what has been your, or directionally, what has been your flow market share, inflow market share in the last few months? Thirdly, you had in our earlier interactions or analyst meet, I think you had mentioned about a agency to kind of evaluate the funds, and where are we in that process right now? Yeah, those would be my questions. Thanks.
Yeah. I think with respect to the revenue drop was largely on account of equity mix. Equity mix has dropped by about 1.5% compared to the previous quarter. As a result of that, equity mix getting reduced, the revenue has dropped. Therefore, the number what you are saying is derived from that. As far as the fund performance impact, across all over the main categories, right from frontline equity, flexi-cap fund, balance advantage fund, multi-cap fund, and some of these thematic funds, we are seeing improvement coming in. And in fact, our sales on these funds, in fact, I was seeing it today only in generally how the numbers are even coming in the month of April. These numbers are now getting positive. Normally, the way we have been addressing the last 1.5 years, our rate of fall has to come down. That we have witnessed in the last quarter. The rate of market share loss has been coming down quarter on quarter basis. Second, largely performing funds should also come as part of the recommendation list that we are now seeing. Some of our funds which are performing well now is coming as part of the recommendation list in some of these organized channel. In fact, the sales team is also driving 5 focus products, and all 5 focus products are in the Q1, Q2. That's being not only being seen, people are also talking about it in terms of fund performance coming back. Is something making our partners to contribute more for the AUM success in the current financial year. That's something we're already seeing it. In the last quarter, we are seeing some bit of flows coming into in those funds. And last question is around, which is your third question?
Flow on market share.
Yeah, that I mentioned, yeah.
Sir, it was about, hello, can you hear me?
I can hear you.
Yes, I was asking about the consultant that you had hired to improve to evaluate the funds and...
I got it. No, we engaged with Mercer about 2 years back when Harish Krishnan joined as head of equity. We had already initiated a discussion with Mercer to help us to understand the current processes, what are things need to be improved. In fact, those input has been taken by the new head of equity and implemented some of the process changes that they implemented in the fund house in terms of tracking of our ownership, stock selection, other ownership of stocks, and sizing of those opportunities in the portfolio reflection, and also monitoring the performance very closely, where we have also put a target that we should not have any funds which is in Q4. We should try and keep all the funds in Q1, Q2 performance, and not necessarily everything has to be in Q1. In fact, 65% of our funds are delivered Q1, Q2 performance for March ending on a 1.5 years basis. So I think this has come largely on the back of the Mercer engagement that we did, which has now been built in as part of the overall process. Of course, in addition to that, whatever session that came, the new team, which is not new team, except Harish and one more gentleman we recruited for a smaller mid cap, along with the other portfolio managers, the restructuring of team from the fund management responsibility point of view, allocating to individuals the portfolio responsibilities, and each one of them, of course, have taken it with a lot of enthusiasm and to deliver the better performance, better engagement. So that is something which is reflecting, and this is something which you learned it from Mercer's suggestions, as well as the team themselves have derived. In addition to that recommendation, what are the things they need to implement it, which something which is being driven by our head of equity, and now is reflecting on the both the discipline that they are supposed to maintain on the investment processes, as well as focus on delivering consistent investment performance.
Okay, just a couple of more questions. One is, where does the SIC and PMS sit in? Is it in parent or console, standalone or console? And secondly, the other income has seen a significant improvement. despite weak equity markets, is just because of the debt part, or what else is there that is helping the other income improve?
Yeah, please ask Prakash to answer.
Yes, Prayesh, the PMS income is mainly into the standalone also and in Concall also, because it's not a separate subsidiary for us. And as you rightly pointed out, the increase in other income is largely because of the debt funds. Because of some rate cuts, we had benefit on that, and because of that only there is an increase in the other income.
So basically, just clarifying, PMS and ASIC both sit in standalone, and as in terms of consolidation also appears in consolidation, right?
Yes.
Yeah, got that. Thank you so much, and all the best.
Is a subsidiary which is not there in the standalone.
Yeah.
No, so could you clarify that, in the sense a part of income is booked in standalone and part is booked in a subsidiary? How would that happen?
So difference between the standalone and the consolidated is the offshore part. Offshore income is
only the offshore part. Okay.
Yes.
Okay, got that. Thank you so much.
It's included, PMS is included in that. Yeah.
Okay, thank you.
Because it is a division, it's not a separate company.
Okay.
Yeah,
thanks.
Thanks, Rajesh.
Thank you. We have our next question from the line of Lalit Dev from Equirus Securities. Please go ahead.
Yeah, hi, sir. I have two questions. Firstly, like in the previous quarter, we have highlighted that in some of the focus funds, we are seeing that the market share in net flows were in that range of about 3 to 4%. So just wanted to understand, like, how has those net sales fared in those particular schemes in the last 3 to 4 months? That was my first question. And the second question, with respect to the alternative side, so we like last quarter we had the revenue of about 34 crores from the alternate assets. So just wanted to understand how much revenue comes from this alternate assets in Q4FY25.
Lalit,
I'll just ask the second question to be answered by Prakash.
Yeah, so Lalit, on the alternate side, the revenue is more on the alternate side is around 32, 33 crores, same as last quarter, which is mainly because of the volatility in the equity market.
Yeah. As far as your first question concerned, Lalit, the focus fund, we are seeing an improved gross sales number, both in terms of daily transaction volume coming in as well as an SIPs coming in. We are seeing an uptick in the gross sales volume. That's why we measure the as one of the parameters for measuring the productivity of individuals. Even the team communications focus as well as engagement with the channel partners all around the focus funds. And also from fund management point of view also, they are also very clear, those 5 focus funds which are agreed between the fund management team and the sales team. Also is quite conscious of these funds should grow in size, and these are the funds which deserves to be bigger than what we are today. So which is basically foreign equity, flexi cap fund, a multi cap fund, balance advantage fund, and Gen X fund among the thematic category. So that's something we are seeing. Gross volume improving, and net sales also this fund is improving, but I'm sure the continuous engagement can only help in improving the both gross sales numbers and net sales numbers.
Right. Actually, this last question is just one data. What would be the ESOP cost for this quarter, and how should we look at for FY26 and 27?
So ESOP cost for this quarter is around 1.3 crores. And next year there will hardly be any ESOP cost because most of the cost has been absorbed now.
Yeah. Thank you, sir.
Thank you. We have our next question from the line of Mohit Mangal from Centrum Broking Limited. Please go ahead.
Yeah, thanks for the opportunity. My first question is that in Q3 you said that the debt funds actually had an increase in TR. So just wanted to know in Q4 also, did we increase TR enough in any of our debt schemes or even equity schemes? I mean, if you can just throw any color on that.
So more or less whatever increase we have seen in the Q3, now it's the same for Q4 also.
Okay, so it's basically static, right? Nothing has changed.
Yeah.
Okay. Next is basically in terms of the sir saying about the equity innovation fund. So if you can just tell me something more about it as to in case of any size or something that would be helpful.
That comes under PMS, Mohit. Basically, we have about 6-7 products in that as a flagship fund. One focusing on large cap, as well as already we have an innovation fund. We are relaunching one of the innovation fund, both under the AIF as well as in the PMS. That's something we will be rolling it out this year. In PMS, we have not been focusing on new fund launches all of last year. Our focus was largely on building the size in the existing fund. And then we felt that given the good performance that we have delivered and also given the good credibility they have built in the PMS compared to the competition, there is a merit for us to launch our own fund, which is basically innovation fund companies that invest on a lot of money on like R&D, a lot of investment they make on innovation for the future sustainability purpose. Those would be largely the focus areas. That's something we are planning to launch it this year.
All right. That's helpful. Just last question in terms of the branch expansion. If I look at 26 and 27, any particular plans to expand the branches?
See, the broader vision that we have, Mohit, is create a presence in about 543 MP locations. That's the broader vision. Today we have a presence in about 300 locations, out of which 86 roughly is the emerging market location, and roughly about 180 our own branches. Roughly about 50 or 60 is the branches shared with Aditya Birla Capital branches. Idea is actually to keep increasing the emerging market. As the emerging market, the 85 locations, as we start growing, currently we have about 5%, 5.5% market share, 6% market share that we have those markets. As we keep increasing the size, we normally convert them to a branch, and from there we'll again look for new markets. We identified roughly about 130 markets, emerging markets already identified this year being about 30 of operations, and those 30 markets will be focused in terms of emerging markets. And existing market, we also set a target for each of their location in the current rolling out of exercise for the coming financial year in terms of expectation from the team. Each branch location, we are keeping a target in terms of improving the market share or improving the ranking in each of the location. That is something we monitor internally, just ensure these markets start contributing. See, our historical market share in the B30 market generally has always been very good. And even today, our B30 contribution is very good. But given the potential, given the brand recall that we have in these markets, we have identified about 30 locations where which we will expand this year. But this will be a one-man locations.
Okay, understood. That's helpful. Thank you and wish you all the best.
Thank you. We have our next question from the line of Madhukar Ladha from Nuvama Wealth Management. Please go ahead.
Hi, good evening. Thank you for taking my question. First, just on the yields part, there seems to be a QOQ sort of pretty sizable decline. I just wanted to get a sense, have our equity yields remained stable? And could you also give us some sense of what is the yield on the alternate and offshore equity and the alternate and other offshore asset classes? So those two asset classes, what is the rough yield that we make of there? Second, in this alternate and other offshore segment, there is a pretty good jump in AUM this quarter. So I'm not sure, maybe I missed this, but if you could help me understand what is driving that growth. And finally, on staff cost, we are seeing like sort of a 10% growth, about a 13% growth QOQ basis. I wanted to get a sense as to, how should we look at it going into next year? And for the full year, I believe staff cost is at about 365 crores. So even if I were to look at it on a full year basis, maybe you could help us understand what's like the fixed cost and variable pay in this, and then what sort of growth should we assume in fixed? Yeah, those would be my questions. Thanks.
So on the yield question, I'll ask Prakash to answer.
So Madhukar, if you see quarter on quarter, there is a marginal decline in the yield, which is mainly because of the equity mix has gone down. Okay, so from around 47%, we are around 45-46%. That is the main reason for the yields going down, because equity mix has changed.
But otherwise, contribution remains the same.
Contribution is more or less same.
Yeah.
Contribution is same. On the you spoke about alternate asset on the PMS and AIF side, we earn around 1% plus. On the offshore side, from the GIFT City, again the yields are in the same line, which is 1% plus. And on the overall offshore business, range of around 30 to 40 basis point.
Yeah.
Coming to your staff cost question, means currently whatever hike which you have seen in the current quarter is largely, as we have explained previously, is because of the year-end bonus provisions and some increase in the staff welfare cost.
Plus also, just to add to that, Madhukar, is especially this year we had also built our team, which was budgeted at the beginning of the year in terms of beefing up our direct sales team. So now we have almost about 80 people are working in the direct sales team. And that's something is also increased the headcount when it comes to the question of direct, which is again investing for the business building. In addition to the what Prakash mentioned about it. But in terms of our alternate asset offshore, we won one mandate. Of course, this was in the last quarter, in fact. One of the Canadian pension fund, we won mandate roughly about $52 million. And there we are getting some decent contribution, and that amount will likely to go to a higher number as and when they feel more comfortable putting money in emerging market, especially in India. That's something we are working. And second is this quarter we also added the DSIC mandate, which we have won about 3 quarters back. And finally, the money started coming in the last quarter. Therefore, the number, when you look at it, shows a 268% increase. Because we could have shown this separately, the advisory, but otherwise it has come under the PMS mandate itself. Therefore, you have to add it to the PMS itself. But otherwise, the PMS and minus, if you take, PMS has remained static. Whereas the ESIC mandate has added to the overall AUM growth.
Understood. And this, you mentioned that the yield for the PMS AIF is about 1%, and that is not that's the gross yield, or is that the net yield which is getting accounted for? Net yield on the revenue.
Net yield, yeah.
Okay. Understood. Got it, sir. Thank you. All the best.
Thank you.
Thank you. We have the next question from the line of Abhijit Sakhare from Kotak Securities. Please go ahead.
Hey, hi. Good afternoon, everyone. My first question was if you could share what would be the mutual fund revenues for financial year FY25 and a comparable number for last year as well.
So for FY24 is in the range of around 1,300, and currently it's in the range of around 1,600.
Okay. And again, and on the yield front, if it's possible to give any indication on what's the number on the fresh flow versus the older book?
Give the yield on the fresh versus the old book. But on a consolidated basis, on an equity, we earn around 68, 69 basis points.
Got it.
We generally keep that as a benchmark, Abhijit. Mainly, even normally new assets comes a little higher cost initially, and then gets over a period of 2 to 3 years, it gets adjusted. So we normally keep a benchmark. I think the ultimate contribution from equity should be in the range of 670 basis points. That's something we keep as a benchmark accordingly price it. We may probably do intermittent push to improve the overall sales numbers. But as a broad principle on a collective basis, that's what you will target.
Got it, sir. And then the last one, you mentioned about 5 focused funds. So these are Frontline, Balanced, Multi-Cap, Gen Next, and there's one more, right?
Which is the Balanced Advantage Fund. Multi-asset and Balanced Advantage Fund. Yeah.
Multi-asset. Okay, got it. And sir, fair to assume that all of these funds are now in a positive net flow zone?
Yes. See, the way I see it is, I must also admit that all of last year, we did see some kind of redemptions coming in. Some of the funds, very few funds were getting inflows on an overall basis. Gross volume used to always be good. But in terms of flows, were getting a bit restricted. But that something is now, with both gross flows and net sales now improving on these funds, backed by performance, communications, narrative, and high level of engagement. And in fact, I must mention that last 1 year, 80% of the funds are beaten the benchmark. See, all these things are now getting recognized, noticed, and in fact, some of the segment in which we have a very strong relationship is also coming as part of the recommendation list as well. And therefore, this engagement would only help. Second, we have kept the 5 focus products, but these are the products where anyway 70% of the flows for the industry also comes. And so that's why we have kept these 5 products as a focus product in addition to other thematic products we already identified. Those will be in addition to that.
Got it. This is super helpful, sir. Thank you.
Yeah.
Thank you. We have our next question from the line of Dipanjan Ghosh from Citigroup. Please go ahead.
Hi, good evening, sir. Just a few questions from my side. First, I'll start with the data keeping question. If you can give your SIP flows for the quarter and your employee count as of March 31st. Now coming to other questions, while you have mentioned incrementally sales turning positive or net sales turning positive in few of the equity fund categories, just want to understand for fourth quarter directionally, were you in the green or red in terms of overall flows? And in terms of flow market share, when you look at your SIP market share for the month of March, it's a little bit down compared to December marginally. So when you say that directionally your reduction in market share losses have kind of narrowed down, is that a fair assumption that on the lump sum side, you are seeing relatively better performance, be it on gross sales or lower redemption? And the last question is on the cost front. So obviously you mentioned that you will be expanding the direct sales team. You have ambitions to further scale up the alternates or the non-MF business out there. So let's say for the next 1 or 2 years, how should one think of the overall cost trajectory?
So on the first question, SIP book and the thing.
So Dipanjan, the SIP book collection for the quarter is around 4,000 crores. Employee count as of March 25 is 1,628.
Yeah. With respect to the SIP book concern, of course, the quarter was, as I mentioned earlier, there was a general dip in the terms of registration for the industry. And for us also, there was a dip. And as I mentioned, STPs, some are getting cancelled. This quarter, generally the cancelled rates were a little higher than the previous quarter. But having said that, anyway, we've been having a big push with respect to the SIPs. The idea is actually to continue to keep that high level of focus. So 1 or 2 quarters here and there can go here and there. I don't think I should get worried given the fact that focus on building SIP remains during the volatile period. That's why we are pushing it. For the longer term outlook, in fact, this year itself we had kept a target of 1,500 crores SIP for the full year, but we did about 1,320 crores. Therefore, we keep a little bit of higher aspiration in terms of building this number. And with the performance improvement coming in, I would also expect online platform also start contributing to the SIP success. So that's something will remain as a big area of focus. And with respect to your last questions, which is the one?
Direct team.
Yeah, direct team. The direct team, see right now we have about 80 people. I think idea is I should have about 100 people in direct. And in fact, what we are also doing is the sales team in general and the retail sales team as well as NC sales team, they do have a main mutual fund target as a main focus area for them, and alternate is one of the additional assets they sell. In fact, we have identified for the family offices person to come on board, and we also have a separate team of ICs for building our alternate business. We are also increasing the KRA deliverables for the senior RMs across different parts of the market. We are dividing the sales force into a sales team into three parts. Somebody who is like a wealth manager can sell all products. Somebody who is not a wealth manager but can sell only the mutual fund product. Therefore, accordingly, we are dividing the deliverables for each of the individuals, each of the team and market, and basis which will build alternate assets. Again, alternate assets, my own belief is could become one of the big area of focus for two reasons. One is we have launched two products in addition to PMS. PMS is directly linked to the equity, whereas fixed income credit-oriented funds is something with the yields coming down. We believe credit-driven fund could be one of the credit, what we call the performing credit, what we call it. That's something we have set aside some target, and we have been running around, the team has been running around meeting family offices, getting size, including offshore investors. Second is credit-related real estate fund. Also, so far the performance have been very good, and now that is also being recognized. Investors are also now willing to accept it. Therefore, the team that we have built, increasing the KRA weightage for individuals, and the renewed focus in terms of high-level engagement on the basis of targeted engagement with the customers basis their wallet share. I think these are the activities should help in terms of improving the alternate business for over next 2 to 3 years. And last but not the least is offshore side. When last call also I mentioned, we will be taking the Sun Life help to have somebody on Sun Life board to soon come, very soon it come, who could help us open the door in the overseas market to help us reaching out to global pension funds for winning some mandates. That also is there in the card, and probably we'll be able to give you more details in the second quarter, if not before.
Right. So my question was more, does that add up to your cost pressure, be it on sales expansion or kind of scaling up the alt business?
No. It is basically optimizing the existing team for delivering higher numbers.
Right. And then one of the questions which I asked was, net flows for the quarter, was it in the, has it turned into the positive, is it in the positive category or?
It was a positive for the last quarter. In fact, last quarter we had a net sales positive both on equity arbitrage fund. That of course was the whole quarter it was there, except the last few days there was an outflow. Again it came back in the month of April.
Got it. Thank you, sir, and all the best.
Yeah.
Thank you. Ladies and gentlemen, that would be the last question for today, and I now hand the conference over to the management for closing comments.
Yeah. Okay. Thank you everyone for joining, and with this we conclude our Q4FY25 earnings call. Do feel free to reach out to our IR head, Mr. Prakash Bogle, for any queries. Thank you.
Thank you. On behalf of InCred Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.